the Tornado Cash smart contracts are just a program. And by the way, they're what's called an immutable smart contract, meaning they can't be changed by anyone. They can't be shut down. They use the Treasury Department's authority under OFAC, which is a part of the Treasury that does foreign sanctions, to sanction literally the code of the smart contracts. And they said if an American interacts with this code, that is now a crime. Criminal case that is going to trial in the next couple of months is incredibly important from a presidential perspective for Bitcoin. And specifically the question of whether someone who creates a non-custodial tool, and the smart contracts in Tornado Cash were non-custodial, if that constitutes a money transmission service under US law, then so too could a lot of important non-custodial infrastructure around Bitcoin.
What's up, guys? Welcome to the Byte Federal Podcast. Zack, thanks so much for joining us today.
Thanks for having me.
Yeah, absolutely. It's great to have you back. So we spoke with you briefly last week on the new Bitcoin Center show, and that got those are like shorter segments. So I'm really excited to have you back. I really appreciate your time coming on the longer form Byte Federal Podcast, so that we could have a longer conversation about some of the things that are going on.
Sounds great.
So for people who are joining that maybe aren't familiar with your work, do you want to give a super brief intro in terms of the work that you're doing?
Yeah, for sure. My name is Zack Shapiro. I sort of wear two hats in the Bitcoin space. My day job is I run a law firm called Reigns LLP. We represent a bunch of different Bitcoin startups, in all different parts of the Bitcoin space. Doing sort of corporate law, regulatory law, and venture fundraising. And then I'm also the head of policy at the Bitcoin Policy Institute. My role there is to think about what policy areas we want to focus on. For those who are not familiar, BPI is a Bitcoin-focused think tank and is sort of the premier Bitcoin-focused policy organization in Washington, D.C. So I spent a lot of time thinking about what are the sort of most important policy areas in Bitcoin that we want to focus on, and then what should be our specific stance on those issues. And one of the initiatives that I've spinning out of BPI is called the Peer-to-Peer Rights Fund, which is focused specifically on the federal courts as a venue for policy and making sure we don't get damaging court precedent that hurts the Bitcoin ecosystem.
Awesome. It's really important work that you're doing. And I'm not going to lie, I, like many others, before I worked in Bitcoin, was not super familiar with the problems that you guys are fighting. But now that I work in Bitcoin, I am all too familiar with the challenges that the industry is facing. So I think it's super, super important. I'm going to drop some of the links to some of the Bitcoin policy articles that have been written into the link here. And if you guys that are listening are not familiar with the work that they're doing, super important, check it out. So again, thank you for joining us, Zack. We had reached out to you last week to comment on a post that Roman Storm had put up on X. And he tweeted last week, "I am being prosecuted for writing open source code that enables private crypto transactions in a completely non-custodial manner." So those that aren't familiar with this case, can you give us a brief overview on it? And then as a follow-up to that, I'm going to ask you, why should Bitcoiners care? Tornado Cash is built on Ethereum. And so unfortunately, a lot of Bitcoiners have kind of said Bitcoin doesn't care and this doesn't affect me in any way. So could you give us an overview, a sort of 1-2 punch on all of that?
Yeah, absolutely. So in order to understand this case, you need to understand two specific pieces of infrastructure in the Ethereum ecosystem. But ultimately, a lot of this will tie back to tools we have on Bitcoin. And the first is, if you think back to 2021, there was a lot of what probably most Bitcoiners would say is irrational exuberance around things like NFTs and Web3 gaming and all of that type of stuff. And people were really excited to build, crypto applications where you'd play a video game and the character in the video game would be an NFT and the in-game currency would be a token and stuff like that. And the most popular attempt to do this was a video game that a lot of listeners might remember called Axie Infinity, which was kind of like Pokemon where the Axie characters were NFTs. The in-game currency was an Ethereum ERC20 token called Smooth Love Potion, and you could buy these things on OpenSea and then play the game. And the game was wildly successful. At the market cap of these tokens at the peak before it all collapsed was worth tens of billions of dollars. It was some significant percentage of the GDP of the Philippines was people just playing this game to try and earn these tokens to make money. And had some sort of Ponzi dynamics, as a lot of stuff did in 2021, but got very popular. The problem is you can't really play video games directly on Ethereum because Ethereum is slow and expensive and it doesn't work well for that. And so what the Axie Infinity people had to do was create this sort of side blockchain on Ethereum called Ronin. And then they created a connection between the Ethereum blockchain and that side chain, kind of like we have for Liquid on Bitcoin, called the Ronin bridge. And this is where you would sort of buy your NFTs on OpenSea, you put them in the bridge, you play them in the video game, you bridge them out, and then you can sell them. And this, was largely a gambling vehicle. Another piece of technology on Ethereum at the time was called Tornado Cash. It was started by Roman Storm and a couple of his co-developers, and it is meant to allow people to spend Ethereum privately. Just like Bitcoin, the Ethereum blockchain is completely open. You can see all of the transactions people are making. And in some ways, there's actually less privacy on Ethereum than there is on the Bitcoin-based layer, because while Bitcoin uses a UTXO-based model, where what it means to own Bitcoin is to have certain unspent transaction outputs, and maybe looking, with a chain analytics tool, you can associate that with different addresses or wallets. On Ethereum, you have an account, and the account is, it's sort of more like an analogy to an email address where, you have your private key, which is the password to that address, and that address holds all of your Ethereum assets. And so you can really trace someone's activity very easily. So Tornado Cash was a tool meant to allow people to spend privately, notwithstanding the open nature of the blockchain. The way that tool worked is you would send Ethereum to a smart contract, which is a program that runs on the Ethereum blockchain. You send it the smart contract address. It gets pooled with other people's Ethereum, and you would receive back something called a secret note, which is kind of like a private key. It's a long string of letters and numbers. And you could use that secret note with a zero knowledge proof to withdraw the amount of Ethereum that you had deposited into the smart contract. But because it's this pooled contract address, you would get sort of your Ethereum mixed with other people's Ethereum, and it would be hard to tell where the Ethereum was going from and to, and it would allow you to spend these things privately. Now, the reason I started with the Axie Infinity tools is in order to understand this case, you have to understand what, if you measure it at the time that funds were stolen, was the largest heist in human history, which is the North Korean government infiltrated the startup that created the Axie Infinity video game. They were able to gain access of the Ronin bridge, which was the connector between the Ronin sort of video game sidechain and Ethereum. And they, in something like 90 seconds, they stole something like $650 million. And then, because that was all public and laundering that much money is really difficult, they put it through the Tornado Cash tool. And this understandably freaked out the United States government. We don't like the idea of North Korea getting around sanctions by stealing hundreds of millions of dollars. There was a lot of worry that this money would be spent on North Korea's missile program. And so the government felt like it really needed to respond strongly. And so it did two things. First, it locked up the developers in the case. Right? It launched this prosecution against the Tornado Cash devs, charging them with two federal crimes. One is conspiracy to commit money laundering, which is alleging that they sort of knowingly helped bad actors like the North Koreans launder funds through the Tornado Cash tool. And the other is unlicensed operation of a money service business, arguing that the Tornado Cash service, right? So they talk about the smart contract and the front end website and the DAO around the Tornado Cash tool collectively constituted a money transmission service, which, like a sort of custodial exchange, would have to register with the government and KYC people, and they failed to do that. The second thing the government did, interestingly, because the Tornado Cash smart contracts are just a program, and by the way, they're what's called an immutable smart contract, meaning they can't be changed by anyone, they can't be shut down. Just arresting or charging the Tornado Cash devs didn't stop Tornado Cash from working, because it's just a program that can keep going in a decentralized fashion. They use the Treasury Department's authority under OFAC, which is a part of the Treasury that does foreign sanctions to sanction literally the code of the smart contracts. And they said if an American interacts with this code, that is now a crime. And so, of course, the first thing the crypto community did was find all of the Ethereum addresses for like celebrities who had bought Bored Apes or whatever, and send them small amounts of Ethereum through the Tornado Cash smart contract to show that this is sort of ridiculous because technically receiving those funds is a crime, but you can't stop it because it's immutable. And there's been a lot of litigation around the OFAC side of this. And actually, a few months ago, the Fifth Circuit Court of Appeals, a federal appeals court, ruled that the Treasury did not have the authority to sanction this smart contract because smart contracts that are immutable, at least, are not property because they can't be controlled or owned by anyone. So they don't fit within the government's authority. But the criminal case is still ongoing. Now, the Fifth Circuit ruling on the sanctions case, while I think is correct and it's good for crypto broadly, that doesn't have much bearing on Bitcoin because we don't really have immutable smart contracts on Bitcoin. That's not something Bitcoin is set up to do. But the criminal case that is going to trial in the next couple of months is incredibly important from a precedential perspective for Bitcoin, and specifically the question of whether someone who creates a non-custodial tool, and the smart contracts in Tornado Cash were non-custodial because the developers couldn't move people's funds. It was just this code on the blockchain that people used their keys to deposit and use the secret note, which is essentially a private key, to withdraw. If that constitutes a money transmission service under US law, then so too could a lot of important non-custodial infrastructure around Bitcoin. I'm sure we'll get into that in more detail, but that's sort of the basic outline of what happened with Tornado Cash and where we are now.
Awesome. So, okay, there's a lot there. You reference the action, like the North Korea hack, as kind of a starting point for the federal government. And I'm interested to know, I have always felt like there is, there's a lot of stuff that has been happening, and that's sort of, they were kind of like laying in wait with an objective, like an end goal. And unfortunately that happened, and it gave them like the firepower to start coming after, like we saw them also go after Samurai, and we saw, Chokepoint 2.0, and all of this stuff sort of happen in conjunction. So I don't necessarily think the Tornado Cash case is like a one-off where North Korea did bad things and we can write it off because actually there was a hack and this is bad. I think largely the previous administration had some goals to pull back the control over the industry. Do you agree with that? Do you feel like this is all coordinated, or is that maybe a conspiracy that I ran away with?
The truth is, I think it's a little bit more complicated than that. So if we go back to, just set the context for how the law deals with decentralized tools like Bitcoin. Let's start with, why was Bitcoin a innovation in the first place? Bitcoin came out of a multi-decade attempt by a group of sort of idealistic coders called the cypherpunks to create digitally native money. And there were attempts to do this before Bitcoin: DigiCash, eGold, Liberty Reserve, and they all failed. And they all failed because they had a central point of failure. And the government came after them and said, this is a money transmission service and you're breaking the law. And in some cases, people went to prison. But it didn't work. And Bitcoin did work because through the proof of work mechanism and through the balance of incentives in the Bitcoin network, Bitcoin created a system that had no trusted third party. Another way of saying that is that Bitcoin, and it's right there in the title of the Bitcoin white paper, is a peer-to-peer electronic cash system. And the peer-to-peer part is really important. When you make a Bitcoin transaction, Bitcoiners know that there's no trusted third party, and that's why it's important. But if there's no trusted third party, what happens when you make a Bitcoin transaction? It is literally you and the other party doing a transaction between the two of you on a peer-to-peer basis, only intermediated by code. And that was incredible. In the early days of Bitcoin, though, lawyers that looked at Bitcoin were sort of confused about, okay, all of these other systems had been shut down because they were illegal money transmission services. What, if anything, in the Bitcoin ecosystem might the government try and go after? Is the government going to try and make this broad argument that Bitcoin itself is a money transmission system and is de facto illegal, as a network? Do exchanges have to KYC? Are they money transmitters? And the first time that we got guidance from the government about this question was in 2013, when the government put out the first FinCEN guidance. And FinCEN is the part of the Treasury Department that deals with KYC AML issues. When we talk about being an unlicensed money transmitter, the license you'd have to get is with FinCEN and then with the states. And the 2013 guidance, created this idea that there are users of the network. If you use Bitcoin, you're not a money transmitter, right? Because you're just interacting on a peer-to-peer basis. There are exchanges in the network, right? And there weren't decentralized exchanges at the time. So we're talking about custodial exchanges. Those were money transmitters. You did need to KYC if you were a Bitcoin exchange or if you were an individual that was buying and selling Bitcoin as a service. And then there were administrators and administrators, if they had centralized control over a system, were money transmitters. FinCEN then put out another guidance in 2019 that was much more comprehensive. At this point, there are many more tools like multi-sigs, there's crypto, there are ICOs, a bunch of stuff has happened. And the 2019 guidance is the last sort of comprehensive guidance we got from FinCEN. And it looks at different business models in the crypto ecosystem and says, okay, these are the things we think are money transmission. These are the things we think are not money transmission. And the crux of that 2019 guidance is if you accept and then transmit funds on behalf of the public, you are a money transmitter regardless of how that happens. So, one example is a custodial wallet, a wallet where you have an account with someone. You're not holding your private keys, they're holding the private keys, and you're basically asking them to move Bitcoin on your behalf. That is a money transmission service, and you have to KYC. And so like custodial Lightning wallets fall under this, and that's why you have to KYC with them. However, a non-custodial wallet, or what the guidance calls an unhosted wallet, is not a money transmission service, right? And that makes sense. It's just a piece of software that allows you to create private keys, that allows you to engage in peer-to-peer transactions, to interact directly with the Bitcoin network. And there's not a trusted intermediary. And the people that wrote the code that allow you or facilitate your use of the Bitcoin network, right? You download Blue Wallet or whatever, and you create your own private keys. That's not money transmission, the fact that they created that code. And all of there were lots of different prosecutions by the federal government and by FinCEN of people who the government thought were breaking the law and were running unlicensed money transmission business. But until Tornado Cash, all of those were custodial service models. So some of those were like mixers or tumblers, right? Which is a service where you take custody of other people's funds, you send out other funds, usually as a dark web service to obscure where money is going from and going to. Exchanges that didn't properly KYC AML. So Charlie Shrem and BitInstant was an early example of this, right? More recently, Binance is an example. And so, what lawyers understood in the space was the sort of crux of whether you were a money transmitter or not is whether you were custodying people's funds, right? This all comes from the Bank Secrecy Act. The Bank Secrecy Act talks about accepting and then transmitting funds. It's very hard to understand what that means other than you had custody or control of people's funds. And so this, worry about the North Koreans and crypto being used for money laundering, I think scared the government enough that there seems to have been some directive to either U.S. attorneys, which are the federal prosecutors broadly, or to the Southern District of New York, where both the Samurai and Tornado Cash case are based, that, listen, this is a problem. We need you to be a little bit more aggressive in terms of your legal theory in order to catch what we see as this problematic money laundering. I don't think that this is an attempt to kill Bitcoin or crypto directly. I think this is, while it has terrible collateral damage to the industry, I think this was probably seen by the prosecutors as a good faith attempt to combat money laundering using these non-custodial tools like Tornado Cash and like non-custodial coin joins in the Samurai Wallet case. That's, to distinguish it from other attempts, and this is where it gets confusing. There's a bill called DAMLA, Digital Asset Anti-Money Laundering Act, from Elizabeth Warren. And that bill just by law declares everyone in the Bitcoin space, miners, node runners, et cetera, everyone's a money transmitter, even though they can't comply with those rules because that's not how the tech works. That was an attempt, I think, by Elizabeth Warren to kill Bitcoin. I don't think that's what's happening in these cases. I think these cases were meant to combat money laundering, and they just kind of didn't care that the side effect of that would be to ban a lot of non-custodial tools. But that doesn't mean that the precedent is any less damaging. And the core thing, and really I think this is the central message I'd like to give to sort of Bitcoiners who are looking at the Tornado Cash case, why is this such a problem? The government's theory in that case is you do not need to be in control or custody of users' funds in order to be a money transmitter, like the FinCEN guidance up until this point would suggest. You merely need to facilitate other people's movement of funds on the network. And the analogies they use in the case, directly in the briefing from the Tornado Cash case, are a USB cable transmits data and a frying pan transmits heat. And the USB cable doesn't control or custody the data, and the frying pan doesn't control or custody the heat. They just transmit. But both of those are what we mean by transmission. Well, okay, if all it takes is to facilitate people's movement of their own funds, and now you've committed the crime of being an unlicensed money transmitting tool, what else might that apply to? So miners append Bitcoin transactions to the blockchain. I broadcast my transaction with my tools. A miner adds it to the next block and takes a reward. That's facilitating my movement of funds, right? Are miners, do they need to KYC? Are they capable of KYCing? Are the sort of executives at public American mining companies going to go to prison? That doesn't make sense. What about node runners, right? I use a Ledger wallet and Ledger Live software. I sign with my keys, and then the Ledger Live node broadcasts my transaction to the blockchain. Is that facilitating my movement of funds? Do the Ledger executives need to go to prison? What about people who create wallets? What about the Lightning Network? What about eCash? What about et cetera, et cetera, et cetera? And you can take this to a really ridiculous place where, the analogy would be like if two criminals are paying each other in cash and the cash is in a paper envelope, is the timber company that cuts down the tree that makes the paper that goes in the envelope that facilitates the movement of cash, do they need to KYC everyone who uses their paper? It gets to an insane place. But the problem is, if you look at the government's logic from the Tornado Cash case, there is no limiting principle that it's okay, the line is somewhere between a custodial business model and the guy who's chopping down the tree to make the envelope. There really is no distinction. And this would give the government unlimited power to criminally prosecute people who make non-custodial tools. So this is like a 5-alarm fire. It's a really bad situation. And unlike, bad things that come out of the White House or bad things that come out of Congress, these are federal judges who are not elected, they're appointed, and they're appointed for life. And this is, the system works this way based on the Constitution on purpose. We want federal judges to be less vulnerable to political pressure, but these are in many cases old judges who don't really understand the technology. This paradigm of there are now blockchain-based transactions that are completely peer-to-peer, and there isn't a party you can appropriately treat as a money transmitter. That's a difficult concept to get. And so we run the risk of judges unilaterally creating this damaging precedent overnight that can change the laws. And so that's why we started the Peer-to-Peer Rights Fund out of BPI, is this nonprofit litigation fund specifically to get involved in court cases, specifically to educate judges about here's how this technology works. Here's why this technology is different than what you imagine and how you imagine financial transactions work. And we need case law that's appropriate to that situation and not case law that's going to be an effective ban on non-custodial developers.
It's a lot of really important context. And I think, when you make the real world comparisons, you can see how idiotic and insane it is. But unfortunately, like you said, it gets blurry when you're dealing in tech. And we saw this happen, as the internet was widely adopted, and there were all sorts of privacy wars, and we had email and with all new massive technological innovations, you end up with these types of battles. So it's really, really it's a big thing. And like you said, there's a huge precedent being set. I really just want to hammer home the point for Bitcoiners, because there are too many Bitcoiners ignoring this, and it drives me crazy. One question that somebody asked me, totally in good faith, that kind of threw me off was, they said to me, I've never touched anything but Bitcoin. I use a Bitcoin only exchange. I use a Bitcoin only hardware for my cold storage, and I've never done anything besides Bitcoin. And they think because there is this conversation around Bitcoin being a commodity, that the government has already distinguished Bitcoin from crypto. And even, we see a lot of arguing on Twitter about the language and the word crypto is used. But what a lot of people don't know is that it's all regulated as one and the same as digital assets, right? So could you maybe help me speak to that person who is Bitcoin only and genuinely thinks, I don't touch any of that, and so I don't care?
So Bitcoin itself is sort of this new thing. I would say, if you ask me what Bitcoin is, I'd say it's a form of money, right? That's what it's meant to be. It's sort of like specie based money, like gold. But there are different parts of the government that are going to have to fit Bitcoin, which is this network that you can describe as money, you can describe it whatever. They're going to have to fit it into one or the other regulatory regimes to know how the laws apply. And so I can give sort of three different areas of regulation where the government treats Bitcoin as a different thing. So you mentioned commodities. So in terms of like asset regulation, there are two primary asset regulators in the United States. This is unusual, actually. Most countries have assets regulated by one department or agency. In the United States, we have two. We have the SEC, which regulates securities, and we have the CFTC, which regulates commodities. And the biggest regulatory question in the crypto space outside of Bitcoin is which tokens are securities or commodities. This is an area where Bitcoin has more or less always been understood to be a commodity. The difference between a security and a commodity is a security is a bet on a particular group of people on their work, right? You're investing in them, whether you're investing, taking upside in their business, like an equity security, or you're, taking a bet on them in terms of like a promise or obligation, like a bond, a fixed income security, but you're betting on a particular group of people. Whereas a commodity is not a bet on a particular group of people. It's just kind of like a thing in the world, like oil or gold or wheat or whatever, right? And as between the two, Bitcoin is a commodity for the purpose of CFTC versus SEC regulations, because when you buy Bitcoin, you're not betting that Satoshi is going to do anything in particular. In fact, if anything, you're betting that Satoshi is gone and not coming back. However, there are other parts of the government where Bitcoin is regulated as different things. So if you ask the IRS, what is Bitcoin? They won't say Bitcoin is commodity. They'll say Bitcoin is property, right? And that's because they're not looking at it from should it be regulated under securities or commodities framework. They're looking at how should you tax it. And from a tax perspective, Bitcoin is property. You get capital gains or capital losses based on the fiat price of Bitcoin when you buy or sell it. Bitcoin's the same thing it always was, but one part of the government is treating it as a commodity because that's the lens it's looking at. Another is treating it as property because that's the lens it's looking at. And then there's a third area of the government that is relevant to the conversation we're having today, which is the Treasury Department and FinCEN. And how do they look at Bitcoin? And they look at Bitcoin as what they call a CVC, convertible virtual currency, which is similar to being regulated as money for the purpose of KYC AML rules, right? And if you are someone who deals in money or issues money or custodies money, there are illicit finance rules that apply to you. And the fact that Bitcoin is a commodity and not a security is great. It means we don't have to fight a lot of the regulatory battles with the SEC that other tokens have had to fight. But as far as FinCEN is concerned, the part of the government that is relevant to the Tornado Cash case and the Samurai case and to non-custodial developers, Bitcoin isn't exactly the same regulatory classification as the other tokens, which is not security versus commodity or property versus money. It's convertible virtual currency, and that is what the Bank Secrecy Act applies to. So there actually is no distinction between Bitcoin and the other tokens for that purpose.
The Bitcoin Policy Institute actually wrote something about the Bank Secrecy Act being unconstitutional, which is sort of the parent regulation of all of this, as you've mentioned, FinCEN under Treasury, and that's the reason that we have the KYC and AML and all of that. Do you think with the new administration that we stand any chance of repealing some or all of that regulation?
I think it's pretty unlikely.
Okay.
So it's certainly unlikely that it's going to go away altogether. To provide some context on the Bank Secrecy Act, Bank Secrecy Act was passed in 1970. In 1970, organized crime was a really big problem in the United States in a way that it's not now. And the way organized crime would launder their money is through Swiss bank accounts, which were a lot more private back then than they are now. And so basically the FBI would be like, all right, we're investigating the mob. We think they moved money to a Swiss bank account. We're going to go to the American bank that we think wired the funds over to Switzerland and say, hey, give us all the information that you have on the Gambinos. And the American bank would say, sorry, we don't have any records. And that was really bad for U.S. law enforcement. So they passed this law, I think at the time in good faith, to try and force U.S. banks to keep records on their customers, to know their customers, to file SARs or suspicious activity reports when they think that crime is happening. And, that made sense for depository institutions, I think, like banks in the 1970s. The problem is, since then, the Bank Secrecy Act has become this Frankenstein law. It's been amended a number of times. The two biggest amendments were with the Patriot Act in the aftermath of September 11th, and then again in 2020. And it's gone from being a good faith law enforcement effort to be able to go after organized crime to something that looks a lot more like a dragnet financial surveillance dystopian tool. And the piece you're referencing from AL, which is great, I think is largely making that point that the Bank Secrecy Act, as it is today, goes beyond the powers that the federal government should rightly have. However, I just think there is a bipartisan consensus. People are really worried about international money laundering. This is a really sort of central power the United States government has to combat illicit finance, and it's just hard for me to imagine them unilaterally giving that up, or a court after all of these years declaring it unconstitutional. And so, when we thought about, all right, from BPI's perspective, how to address this issue specifically in the courts, I mean, certainly on Capitol Hill, if there is an opening to reform the Bank Secrecy Act to be a little bit less of a dragnet and to have a little bit smarter application to digital assets, that's wonderful. And we'll pursue that. But the real danger here is what, like we're talking about in the courts. And the reason that we called the sort of court initiative we have the peer-to-peer rights fund is because the battle I think we maybe can win here is to make sure that judges and lawmakers and policymakers understand the difference between a peer-to-peer transaction that's just intermediated by software that the Bank Secrecy Act, whether you think it's good or bad, should not apply to, versus an intermediated transaction where there is a financial company in the middle that at least currently the Bank Secrecy Act applies to. And so I think the more realistic battle, and to me the more important battle, is to have this carve out for non-custodial tools that will allow this sort of ecosystem to develop and people to build the stuff on Bitcoin that will make it increasingly powerful as a method of peer-to-peer exchange and as a medium of exchange and a distributed store of value. And I don't know. To me, that's the fight.
I think it's a very good fight, and it makes sense to me. So Byte Federal, the ATM business that we are a regulated money services business. And I agree that, a point can be made that we have the ATMs, and so we are facilitating transactions when you buy Bitcoin. But we also have a non-custodial wallet. And so, that's where we get into the gray area and the application of all of these cases. The tides are kind of turning with the new administration, but these cases don't just go away. Do you think that with the new administration and sort of like the brakes being pumped on Chokepoint 2.0 and some of the other regulatory encroachments that were happening, do you think that might have a positive effect on the outcome of the case, or like a chilling effect on the aggressiveness by which they go after these cases?
So, there are some areas where I'm really optimistic we're going to have positive momentum from the incoming administration. So one is Operation Chokepoint 2.0, which was absolutely a real thing. Had lots of clients who were affected by that. And I think that is going away, and Bitcoin and crypto companies will be able to get bank accounts. And that's great. I think this sort of securities law question that the token issuers and VCs are dealing with, that will probably get sorted out because there's a lot of money and interest behind that. I think this issue is more difficult, unfortunately. Like, this is not the same slam dunk. I don't think there's the same sort of like big money behind it, but it's an important issue. What I am maybe optimistic about, so, we were talking about Bitcoin ATMs. Bitcoin ATMs became officially money transmitters according to this 2019 guidance we were talking about before from FinCEN. 2019 was the last time there was this guidance, and you could imagine a way to operate an ATM that isn't necessarily a custodial model. I would love to see updated guidance from FinCEN that really explicitly makes this custodial, non-custodial distinction and provides hopefully helpful regulatory clarity for things like, Lightning routing nodes, Lightning service providers, ARCs, eCash, a lot of stuff that has become popular since 2019 that we would like not to be held subject to the Bank Secrecy Act. And we don't know who's going to be the head of FinCEN in this administration, but best believe this is something BPI will be involved in and pushing hard for updated guidance. And hopefully that is something that we can get. The other reason for optimism with these cases with the new administration is head federal prosecutors in each district are appointed by the president, and the person that President Trump has chosen to be the lead federal prosecutor in the Southern District of New York, which is where both the Tornado Cash and Samurai cases are based, is Jay Clayton, who up until this point has been a advisor to a crypto VC fund and someone who understands blockchain technology reasonably well. Does that mean he's going to drop these cases? Probably not. But the lead federal prosecutor overseeing these cases is someone who actually does understand the difference between custodial and non-custodial technology and has been involved in investing in startups that are creating non-custodial technology. And so there might be some reason to think that he will be a little bit more careful or sensitive to, what precedent gets set in these cases, what legal theories they use, because he'll understand how damaging it could be to the industry to get it wrong. So we have to wait and see how he proceeds. But that, the problem is the one substantive ruling, ultimately it's a federal judges that get to decide this. And the one substantive ruling we've had from a federal judge is in the Tornado Cash case and is just a total disaster, right? It went as far as to say there aren't First Amendment protections for things like, deploying the Tornado Cash smart contracts. The Bank Secrecy Act doesn't require control. All of the sort of things we think are wrong and are fighting against. That's right now the only substantive ruling we've had from a judge.
I implore all the Bitcoiners that are hardcore Bitcoin maxis not to go running off into the night when they hear the word crypto, and to understand that there are a lot of areas, like you outlined, where precedent is going to be set and it is going to apply to Bitcoin only. You can't change the Bitcoin protocol, but they can, there's a lot of things that could happen.
And it has been, right? The Samurai Wallet case is a Bitcoin only tool.
Yes.
I have conversations all the time with founders of Bitcoin tools, whether those tools are eCash mints or Lightning services or sidechains, or the people that are trying to, one of the big conversations people are having in Bitcoin right now is ossification versus upgrades or whatever. Mm-hmm. Regardless of where you fall on that issue, in order for Bitcoin to scale in the way we want it to scale, to be freedom money to the people around the world that need it, we're going to need people to build tools, right? Especially if we're not going to do a bunch of upgrades to Bitcoin, we need people to be able to build infrastructure around Bitcoin. And the smartest developers that are working on a Bitcoin only basis to build these tools to help people use Bitcoin as more than just digital gold, to use it as freedom money, those people are terrified. And in some cases, they're leaving the United States. The people that are offering you privacy for your Bitcoin transactions are subject to this chilling effect and may be subject to criminal prosecution. And so this is not just a theoretical concern, it is already happening.
Yeah, we saw a lot of the wallets leave. American users can no longer use wallet of Satoshi. We saw Phoenix leave. I mean, there was just
Wasabi.
A flood. It is massive, and it could massively impact Bitcoiners in the US. So it's just a really, really important. For people who are maybe just listening and thinking like, okay, wow, that's a lot. What's the best way, do you think, for people to follow what's going on? Obviously, follow you online, follow Bitcoin Policy Institute, but how, somebody that feels overwhelmed by this, what could they do? How do we give people hope that we can help fight this fight?
Yeah, call your local senator or congressman, specifically calling rather than writing.
Okay.
This is an issue where it's not that the staffer who answers the phone is necessarily going to take specifically what you say that seriously, but they do keep in mind sort of just the number of people that have called on an issue. So that's worth doing just to sort of register your voice on this. Consider donating to the Peer-to-Peer Rights Fund. Again, specifically, that's this surgical nonprofit we've created specifically to get involved in these cases. There's an option to donate in a way that will go directly to the Samurai Wallet Defense Fund, directly to the lawyers to help them fight that case as best as possible. But also you can donate to the Peer-to-Peer Rights Fund in general, and that'll help us develop a war chest that will help combat this chilling effect, right? If we have said that, listen, whatever money we have available, if you are building non-custodial technology on Bitcoin and the federal government comes after you in a civil or criminal capacity, we have your back. And the more of a war chest we have, the better of a blanket that is for the people who are building this tech, and it makes it less likely that they're going to leave the country or shut down or do whatever. So if you have gains this year from Bitcoin, from MicroStrategy, whatever, consider maybe donating some of that, and you can write it off on your taxes because we're a 501c3. And then use non-custodial tools. Bitcoin is at this moment where it's going much more mainstream and it's being financialized in a lot of ways. And increasingly, we're seeing people hold Bitcoin through ETFs, soon to be held by banks after the repeal of SAB 121. There are a lot of centralizing pressures. The antidote to this is people building and then using tools that make self-custody and sovereign use of Bitcoin convenient and attractive. And you can contribute to that by running your own node, by using a hardware wallet, by patronizing the services of the people that are building non-custodial tech in a way that creates a free market incentive for people to build more of that. Sort of at the end of the day, something I say about the regulatory work that we do at the Peer-to-Peer Rights Fund and BPI in general is, in some ways, I see this as a rearguard action, especially on the P2P rights stuff. I think the regulatory and policy and legal work is super important and can be super impactful. But in some sense, the state is not going to willingly give up a lot of the power it has over money. And there's going to be sort of an ultimate fight that's going to be had about this at the end of the day, whether that is decades from now or sooner. And maybe we've gotten a little bit of a reprieve with the current administration, but that won't last forever. And so what we're here to do is advocate for Bitcoin at a policy level, at a legal level, to buy the cypherpunks who are working in the Bitcoin space the time to build actually unstoppable, permissionless, censorship-resistant tools that are the reason we're going to win at the end of the day. It's not going to be, as much as I like the lawyers, it's not going to be the lawyers that win us for it, that win this for us. It's going to be the devs. And if you're just like a Bitcoin pleb who's listening to this, the way you can contribute to that effort, definitely donate to the lawyers. Far be it from me to discourage you from that, but also help out the devs, use their tools, provide feedback, pay for non-custodial services, whether that's like Zapright for invoicing, or AnchorWatch for your custodial services, or a collaborative custody model like Casa or Unchained, or any of the different sort of business models out there. Buy cold cards, whatever it takes to support the Bitcoin businesses that are actually creating this ecosystem that will make Bitcoin usable as freedom money.
Cypherpunks write code.
Exactly.
It's all really, really good advice. We're going to put links for everything in the show notes so that people can do that. And, I hate that I've become a shill for politicians, but I do think it's really good advice. Like, none of us wanted to be involved in politics, but politics wants to be involved with us. You don't take away the state's largest tool, which is their money, their printable money, their unlimited war chest of printable fiat money, without a fight, right? And you can't win a fight if you're not willing to participate. And unfortunately, the structure that surrounds that is this political structure that we have. So I agree with everything that you've said. Getting involved now buys us more time, in which time we can build more tools, and then we win. But we're not going to win without mounting a very significant fight. And I know that you are a big player in that fight on the legal front, and I'm really, really excited and glad that we have people like you and organizations like the Peer-to-Peer Fund and Bitcoin Policy Institute and all of this. I've seen firsthand how badly this can all go, and how hard the other side is willing to fight. So it's good to have people like you guys on our side fighting these battles that unfortunately a lot of people don't even know are happening. So
Thank you. I really appreciate that.
Yeah, absolutely. Is there anything else? I want to be respectful of your time, but is there anything else that you want to say or put a plug in for before I let you go?
Yeah, definitely keep tabs on BPI. I think BPI is something that's gone a little bit under the radar, but it really is this sort of remarkable success story of the two founders, Grant McCarty and David Zell, who sort of memed this into existence out of nothing. It's been, for a while, sort of like a garage band think tank. And the superpower up until this point has been they just have a knack for finding, smart, really articulate people in the Bitcoin space. The work that our fellows have done, Matthew Pines, writes amazing stuff about Bitcoin and geopolitics. And Natalie Smolensky, every time she talks, is amazing. And Troy Cross, the way he talks and writes about mining is amazing. And we just have this incredible roster of academics and thinkers in the Bitcoin space. Things have changed over the last few months. The BPI is now much better funded and is establishing a real sort of Bitcoin embassy in DC, actually in partnership with PubKey. In the next few months, they're opening up a large office. And so that'll be a great physical presence. The BPI summit this year is going to be awesome. The summit itself is going to be invite only, but I think the whole thing will be live streamed, and there's going to be just an incredible amount of attendance from important people in the Bitcoin industry, from Capitol Hill, from the administration. And I think you're going to see the prominence of this organization as a voice for Bitcoin in DC sort of explode. And I think it's going to be really exciting to watch. And so keep an eye on that.
That's super cool.
It's going to be a juggernaut.
Is it public yet where your physical location will be?
I don't know if the specific location is public, but right near Capitol Hill. And it'll be made public, and it's going to be super cool. The plan is upstairs is going to be a Bitcoin co-working space, a podcast studio, the BPI offices. Downstairs is going to be like a huge version of PubKey. It'll have a stage and AV wiring. And I think it'll be like a reason to travel to DC if you're a Bitcoiner to see this.
Okay. I lived in DC for 12 years. Never in my wildest dreams did I think I would be like somehow excited ever to go back or be involved in politics or any of this craziness. But it is super cool to see Bitcoiners invade DC and just, take over.
And while I won't dox the exact location, if you've lived in DC for a while, it may well have been a place you've been before.
Okay, cool. Well, I will keep a close eye on that, and I had not heard that yet, so I'm super excited to hear that. Like I said, I'm a big fan of what BPI is doing, and all of the work by everybody you mentioned is incredibly important. So thank you so much for taking the time to talk to me. For everybody that's listening, thank you for taking the time to listen, like our channel, follow our channel, share this so that people are more aware and less reactive, and support everybody in every way that you can.
Couldn't have said it better myself.
Thanks, Zach.
So you've heard Bitcoin is the new gold rush by now. As world leaders on all sides have endorsed it as the future of money, and now you're looking to get started, we'll show you how. It's actually easier than you think. First, go to your nearest Byte Federal ATM and turn your cash to coin. Byte Federal has over 1,200 locations around the country with the highest daily limits. Go to our website, bytefederal.com, to find the nearest ATM to you. Log in to any wallet, then create an account, deposit your US cash, and instantly convert it to Bitcoin. That's it. We are the only US manufacturer and operator in the Bitcoin ATM industry, and our US-based live customer service is second to none. Go on, give it a whirl, and don't get left behind. Click the link below.